you're watching Texas. We're all watching Texas.
Oh, gosh, yeah.
In a nutshell, well, I've heard it's because of deregulation. It's because of green issues. Did they think that they'd never had another winter storm down in Texas? Is that what we've been convinced at this point, that there's no such thing as snow in Texas anymore, or in Greece at the Parthenon?
Well, look, it does start with this is an extreme weather event. Every operation in our industry builds to a certain weather standard, and this weather condition over the past week or so has exceeded their planning criteria. So they are experiencing difficulties. I thought the report that Brian just gave was right on the money. That is, this is a whole portfolio problem. This isn't just renewables or just baseload. The other thing that you started to point out, Joe, is really true. This is a market structure issue. ERCOT, the Energy Reliability Council of Texas, effectively makes the state of Texas an energy island in the United States. That means that the transmission connections between Texas and the rest of the United States are really pretty limited. So it's difficult for other places in the United States to come to their aid by shipping power. The other thing is, and I don't want to get too technical, but they run their market on an energy-only basis. In other words, where I live in the Southeast, we go through very thorough processes of building optimal portfolios, some baseload, some peaking, some intermediate, and gas and renewables and nuclear and the whole thing. And we build a portfolio first. In an energy-only market, they rely on essentially independent power producers to build generation that will make money in the market at that time. And so, therefore, there is no real incentive to build more resilience into that market, which we would have, I think, in an integrated, organized market.
If you could just explain, as you were talking about sort of the regulatory framework that's in Texas relative to the Southeast, just to speak to that a little bit, because
sure.
What I'm trying to understand is, did the market unto itself create the approach that's being taken in the Southeast, or was it regulation that did that relative to what we saw in Texas?
So about half of the United States is built in the model of what we call organized markets. And effectively what that means is they disaggregate generation, and there's lots of providers of generation, be it baseload, intermediate, or peaking. And they disaggregate transmission, which is another way to iterate around a generation solution. You could build another solar plant, or you can build more transmission, which can move power potentially more effectively. In our opinion, in the Southeast, in an integrated, regulated market, the construction of an optimal energy portfolio is done through iterating around optimal solutions of what should the generation be, just like building a stock portfolio, and what should the transmission solutions be that support that optimal portfolio. In organized markets, you don't do that. It's done basically on formulas, and depending on the kind of market, all these markets are a little bit different. You just have to kind of play in the market and see.
Tom, so it sounds like the Southeast is a more regulated market, but I'm sure some folks who would say, look, regulation may get you that in the Southeast, but look, the market in California is pretty regulated too, and they've had problems as well, no?
Well, but it's also disaggregated, right? I mean, their generation market is not regulated the way ours is. It is not built on creating optimal portfolios. We go through this. It's called an integrated resource planning process. No, they rely on an organized market of their own. It's different than the Southeast.
Shepard Smith here. Thanks for watching CNBC on YouTube.